How to trade the double top chart pattern like a pro. How to trade the double top chart pattern like a pro. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-macd.com. The title of the video is How to Trade the Double Top Chart Pattern like a Pro. Alright, let's get started. Today, probably you have learned about the double top chart pattern and you have been using it for some time. Alright, so some days you trade it correctly, some days it ends up being a losing trade. So what is happening? Why sometimes you can trade a double top and it's working beautifully, and some days it's not working, all right? So in this tutorial, I want to clarify all the misunderstanding about the double top chart pattern and clarify once and for all, okay, how one can trade, okay, the double top chart pattern. The first thing what we want to know when we are talking about any chart pattern, all right, either Fibonacci pattern, Elliott wave pattern, normal chart pattern, the first question that a professional will ask, where and when does the pattern form? So if we see a pattern being formed at the wrong place, we need to put a question mark on that chart pattern. So that's why sometimes trader will trade a double top chart pattern, which is at a wrong place, and they end up losing. So there is a place where the double top chart pattern very often, not always, very often will be formed. All right. The double top chart pattern usually will be formed at the end of an uptrend. So price is in a rising channel, going up, going up, going up from a high. Okay, and then pull back, okay, and then go back again and form another high. But this time we have equal high. There are other variations for double top. I will not confuse you with that today. I will only talk about a double top that we have equal top. But traders who understand the flat correction know that sometimes we have a double top with unequal top, without equal top, okay? So, but today I will only talk about equal top, double top chart pattern, okay? So the first place that we see that pattern is at the end of an uptrend. So that's the first condition. We see the price going up, going up, going up, and then we see a double top chart pattern, which is indicating to us that the bullish momentum is diminishing. But it doesn't mean that it has finished, but it's just warning us, okay, that this bullish momentum may stall. So in an uptrend, the price must form higher lows, higher high, higher lows, higher high, and at one point it form a high, pull back, an invitation to buy, trader responded to buy, price form equal high, which means, okay, the financial instrument this time, at this point in time, has failed to form a new higher high, indicating a weakness in the bullish progression, okay? So how do the pro trade this double top? So that's one place that we see the pattern, all right? At the end of an uptrend. The double top chart pattern, we will see it very often at a resistance level. So sometimes you may not see a proper, okay, uptrend, but if the price reaches a key resistance level, the price may form a double top chart pattern. Now, I'm going to talk about something that maybe you do not know before, all right? A market stable data is something that remains intact in the market, okay? All right, so I want to talk about one particular market stable data that you need to remember all the time, that bearish chart pattern, okay, are often formed on or near a key resistance level. This is a market stable data. So when we see a bearish chart pattern, like a double top, we want to ascertain that double top is being formed at a resistance level sometime. So then we see a double top, but if there is a better resistance above it, the price will go and form a higher high, only to come back down. Now, I don't want to confuse you with that, but just remember. So if you see a double top and there is a better resistance above, just know that there's a high chart. The professional may prefer the resistance that is above. All right, that's what I will mention to you now. Okay, because I don't want this video to be too long. Okay, so the double top chart pattern, we want to know where it is formed. It's formed at the end of an uptrend. Okay, all right. It is formed at a resistance zone at a key level. Okay, so you want to know that. Very, very important. Okay, that's where we see a double top chart pattern. So how do the pro trade the double top chart pattern? Okay, so we see here I draw my line. This is the bullish progression. If you like my drawing, you can clap. Now this is to make you laugh a bit. Okay, I'm kidding now. Okay, I'm going to color my bullish progression into green. So the price going up, this means high, low, high, and form this high here. Very often what we see, the price will pull back in three more. 1, 2, 3. Now, just think of it that way, okay? Price pullback, okay? But sometimes you may see it go down 1, 2, 3 like this, and then 1, 2, 3, and then form equal high. This is a top and an equal top. So now we have a double top. So we want a price to start changing direction here. So we see the equal top is not subjective. So sometimes trader will just see it like this, touch it like this, say this is a double top. No. Wait for the price to start changing direction at least. Wait for the common central line along this price action here to be kaput. Wait for a candlestick to close, okay, below that trend line. This trend line, that's what I call a common central line. Now the price starts changing direction after forming equal top. Now we are thinking of a double top, okay? So we will say at this point in time that a double top is being formed, is in formation, is not yet completed, but it's been formed. It may be completed, all right? So what the professional will do, they will measure the depth of the double top. So from the neckline, what is the neckline? Okay. It's the lower part, it's this last low. So you see here, price going up, okay, going up. We have a top and equal top. The nuts or the neckline is this low here, the last low before the equal top. This is the neckline, okay? All right? So they measure the depth of the double top, which means from the neckline to the tops. So here, you see, we have a double top. The neckline is what? The low before the equal top. Here, from here to the tops, the two top, equal top. Here, they will measure this depth and they will project it in a direction of the price. So if the neckline is broken or if the price breaks below the nuts, the first target is the projection of this measuring stick. Down. Look how it was equal here. They sewed it down all the way down, and the price stagger and then form a double bottom chart pattern. This is a nice one. So price reach a target zone, this is what we call a conversion point. If you don't know about convergent trading signal, go to www.stochastic-market.com. So price reaches a target point. Okay. Now, the bearish traders must take profit. So for a bearish trader to take profit, he or she must sell. Must buy. Okay. Correction. For a bearish trader to close a bearish trade, he or she must buy. Can you believe it? A bearish trader buying? Yes. When he or she is about to close a bearish trade. So a bearish trader is buying, a bullish trader will also join them here because they know that the bearish traders will come out of here, this trade here, creating a trading activity, prior run fast up, okay, and then come back down and now form a double bottom chart pattern. Now we have already clarified where and when we see a double bottom chart pattern, okay, at the key level. So you see there was this resistor here, price find a support here, okay, we have a key level here at the support level, price breaks above, okay, this level, and now form a double bottom chart pattern. We know now how to trade it. If you do not know, you search for the video that are titled How to Trade the Double Bottom Chart Pattern Like a Pro by Georgetrio, okay? And then it goes up again, all right? You see now? So for the double top, the professional will measure the depth of the double top, okay, as I show you here, and it will project it below the neckline. So here, I will project it down below the neckline. This is the neckline of my double top, and projection down. This is the target point. I want to clarify something very important that other YouTubers do not talk about, okay? So as the price form a double top here, and the price start changing direction here, all right? Professional, as I show you here, will measure the depth of the double top because they see the price start going down. They will say that the double top is being formed. Okay, you understand that? Okay, that's clear. Okay, so they will also divide into two the targets. So the price target is from here all the way here. They will divide it into two at the midpoint. Why? Because as they start selling here, they will take the first profit at the midpoint of the target. But generally, a lot of day traders and swing traders are not aware of how the professionals are thinking. They do not adopt the mindset of professional traders. So you have millions of dollars you are trading with. They don't stay in the trade forever. They open multiple positions, and some position will be closed at one point. So the midpoint is the first place they are willing to take the first profit. They will close. So if they have, so suppose I'm selling here and I open 3 positions, selling the same financial instrument 3 times. So maybe I sold it at the top here, then it closed it here, then I sold it again, and then it come down more, I'm selling. So I have 3 positions open. I will not going to leave all these positions open until the price reaches the target level. Okay, I will not do that. So as the price going down, I may close my first profit, take some profit, close some trades. My first trade, I may close it, take some profit at the midpoint of the target. So remember, when you draw the target line or the measuring stick, draw the median line of that target. Because sometimes you will see some bullish stock will pull back like this. People will say double top, price come down, people take first profit here, and the price will find support and just run out from the midpoint of the target. So if the price closes below the neckline and you use a top-down trading method to trade it, and the price rolling it down, be aware of the midpoint of the target. You may secure some of your gain, which means if you don't want to close the trade, move your stop loss to, okay, break even. What do I mean? Move your stop loss to the opening price because you are already in profit to protect that trade, okay? That's what I meant by securing. Personally, I just close the trade. I just close it, all right? I will have another trade later on. Doesn't bother me, all right? So I may close some of the trade. I may secure some of them, all right? But generally, I close them, all right? Okay? So price, they will take first profit here. Sometimes you will see the price will be below the midpoint and retest it here, break below, retest, and then before coming down again to this point. But the trend has not yet begun because for the bearish pattern, for this double top pattern, is being formed. It's only completed, repeat, the double top chart pattern is only valid when the price finds a resistance below the neckline. So all this move down all the way to the neckline, the double top chart pattern is not yet completed because the challenge for the double top chart pattern is the neckline. That's why us traders, day traders, swing traders that are selling at early stage at the double top point here using a top-down trading method, they are prepared to take the first profit here, and as the price approaching this level, they take another profit. And sometimes you will see that the price will find a support, okay, at the neckline and quickly change direction and start resuming the bullish trend. So we will talk about continuation pattern, all right? But if the double top is only ready, so to speak, or cooked, okay, all right, so to speak, all right, only if the price dip below the neckline and find a resistance below the neckline, then we will use these targets, okay, below the neckline to set ultimate greedy target. But as we set a target, remember what I just taught you, whenever you set a target like this, always pay attention to the midpoint of the target. So the ultimate target is the pink line here, which is the projection of the depth of the double top. We will divide that into 2 if you are swing trading or day trading. So you come to the midpoint, you don't want to close your day trade, suppose you are day trading, you say, all right, move your stop loss to break even, okay? Control the trade, manage it. Otherwise, you'll be surprised, price will run. If you are not watching the market, because a lot of traders are not watching the market all the time, secure your gain, all right? Work on it, okay? Use a demo account, try different strategy and see what works for you, okay? So be aware of the midpoint, okay? So because professional will take profit at midpoint of the target, All right, sometimes the price will find a support there and then resume the bullish trend. But the ultimate target is the projection of the double top. Remember, the double top chart pattern, all right, is a trading setup, okay? We will always use what we call a top-down trading method, all right? Without a valid trading setup, there is no valid trading signal. So we want to know where and when a double top is formed. It's formed at the end of an uptrend, okay, at a key resistance level, at a key level, all right? Very, very important. We will also see there's another point where we see a double top at a target price level. So we are trading, okay? So like I show you now, we set a target for an inverted head and shoulder chart pattern. There is a target. For a round bottom chart pattern, there is a target. So price going now, price reaches a target level. We may see also at a target price level a double top chart pattern. So at resistance zone, okay, at the end of an uptrend, okay, at the key level, at the price targets. So you want to know where the professional are setting target. How do you set a target for a triangle? How do you set a target for an inverted head and shoulder chart pattern? How do you set a target for the flag and so on, or the deep variation of chart pattern? All right, you want to know. We can also see for a bullish chart pattern price target zone, we may see a double top chart pattern. Okay. Now you know the drill, okay? You know where the double top chart pattern will be formed. You also know how the professional are dealing with it. They will measure the depth of the double top. They will divide it into two. The target, they will project below the neckline, all right? And they will also divide that into two. Those are key levels that they are watching. Always, when there is a double top, suppose we see a double top on a daily chart, okay? We'll use the daily chart for the trading setup. We will go quickly to the monthly chart to see whether our trading setup is good or bad or useless. This is about the validation of the trading setup, okay? And then we will go to the hourly chart, so daily chart, hourly chart for the trading signal on the hourly chart, and then 10-minute time frame for the entry. We may zoom our entry time frame even down to the 1-minute time frame, 3-minute time frame to pinpoint the best place to enter the trade. So the trading setup is not a signal. The double top chart pattern is not a signal. It's a trading setup. Now we must know how to trade it. The TSTW24 traders have a filter for the double top. Okay, something should happen to confirm the double top. This is to help traders, okay, to trade the double top. So we are recording this video, okay, to teach traders how the professional are trading a double top. And one thing I don't want you to forget also, because it's so important, sometime you will see that a price from a top like this, you go down 1, 2, 3. Let me show you one here. Now, for traders who understand Elliott wave, the first thing that is coming to our mind is a flat correction. You see here, it went down. You see, there was a bullish candle here, and then it came down. Can you see it? And then it came down like this, okay? So this is alerting us that this is looking good as a double top, okay? Now again, it went up, and then it came down. That's why my son will say, without cheating. And then again, it went up, okay? You see, 1, 2, 3, 1, 2, 3, all right? Before it came down to the neckline and break below and hit the target on the dot. This is nice and beautiful. Now it's heading here. This is again a resistance zone. The stock that we are looking at is Intuitive Surgical Incorporation. This is listed on the Nasdaq 100. This is not surprising. Why is this not surprising? It is not surprising because professionals are trading the Nasdaq 100 components. You can't mess around, okay? So if you have any question, put in the comment section, and in due course, I will record another video to answer your specific question, all right? There are more about a double top. I just want to concentrate on equal top so you don't get too much confused. I will be recording more video about different variation of a double top. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to trade the double top chart pattern like a pro. Happy trading to you all, and speak to you soon.